Hello everyone, welcome to the show. Before we dive into today's shocking topic, please give us a like. It truly helps our channel grow. Do you think tech giants like Nvidia and Tesla are guaranteed golden stocks? No, that assumption is dead wrong. The Silicon Valley Mafia godfathers have surprisingly liquidated all their Nvidia and Tesla holdings. For global retail investors, this is definitely a critical warning sign that cannot be ignored. These top investors clearly foresee the fatal crisis of an impending AI bubble burst. Meanwhile, the electric vehicle market also faces an irreversible decline. They chose to decisively exit at the peak of market euphoria. Does this mean the tech stock party is about to end? Despite Nvidia's AI boom, its growth expectations have reached extremely demanding levels. If performance growth slows or faces strong competition from AMD, for example, its high valuation will be unsustainable. The godfathers chose to cash out at the top. This is a classic buy low, sell high strategy. Tesla's predicament is more direct. Global EV market competition is intense. Chinese EV manufacturers are gaining market share worldwide with high cost-performance ratios. Slowing demand in Europe/US and price cuts erode profits. Top investors are seriously questioning its future profitability. Beyond company fundamentals, macroeconomic clouds are a key reason for big investors' divestment. Persistent high interest rates significantly increase capital costs, creating immense pressure. Stubborn inflation and unpredictable geopolitics add to market tail risks. The godfather sell-off is essentially a defensive maneuver. They are withdrawing capital from highly valued tech stocks, shifting to more certain assets. This move itself is a strong bearish signal, indicating a potential major market turning point. It's not accidental but a deliberate strategic shift to reduce risk exposure. Retail investors must be vigilant about this trend. How should retail investors respond to the Silicon Valley godfathers' massive portfolio shift? First, refuse to blindly chase highs. Do not become the last one holding the bag. Second, reevaluate the risks in your investment portfolio. For highly valued stocks, consider moderate reduction or hedging. Pay close attention to insider movements of company executives and top venture capitalists. Their buying and selling often provides more valuable insight than Wall Street analyst reports. Maintain ample liquidity when a market turning point might be approaching. Holding cash or equivalents, waiting for a better strike zone, is a wiser choice. In conclusion, this sell-off storm is not just bearish on Nvidia and Tesla. It's a severe warning against the entire tech stock valuation bubble. Market euphoria often conceals massive underlying crises. Please be vigilant and adjust your asset allocation immediately. Do you believe Nvidia and Tesla are undying investment myths? Wrong. Stunning data reveals the harsh truth. Top investors are massively exiting. Recently, Silicon Valley Mafia godfathers surprisingly liquidated billions in Nvidia and Tesla stocks, leaving nothing behind. This unprecedented, shocking portfolio adjustment not only stunned Wall Street but also cast a huge shadow over global investors, sparking panic. Such abnormal behavior clearly indicates the tech stock frenzy may soon end, with a fatal crisis quietly approaching. These Silicon Valley godfathers are no ordinary players. They are known for their precise insights and market intuition. Why did they choose to liquidate the hottest AI chip leader and EV giant now? A deep, fatal macroeconomic crisis is hidden behind this. Nvidia faces overvaluation challenges. Once growth slows, its high valuation will be unsustainable, with competitors lurking. Tesla's predicament is even more direct: fierce global competition, slowing demand, severe profit margin erosion, a fatal blow. Regarding Nvidia, despite the AI revolution bringing unprecedented chip demand, market expectations for its future growth are extremely stringent. Should performance growth even slightly decelerate, or if faced with strong challenges from competitors like AMD, its lofty valuation will be unsustainable. The godfather's decision to cash out at the peak exemplifies the classic value investing strategy: buy when no one cares, sell when everyone is euphoric. This strategy indicates their deep understanding of an overheated market, where bubbles could burst anytime, and risks far outweigh potential returns. Secondly, Tesla's predicament is more direct. The global EV market competition has entered a fierce, white-hot stage. Chinese new energy vehicle companies, with their extremely high cost-effectiveness, are rapidly gaining market share globally, severely impacting Tesla's position. Demand growth for electric vehicles in European and American markets is slowing, coupled with Tesla's recent price reduction strategies, which have severely eroded its profit margins. All these factors have led top investors to seriously question Tesla's future profitability, making its outlook precarious. Beyond individual company fundamentals, macroeconomic storm clouds are also a major reason for the big players' divestment. This sustained high interest rate environment has significantly increased capital costs, severely hitting growth tech stocks reliant on discounted future cash flows. High borrowing costs directly compress companies' expansion potential and profitability, tightening market liquidity. For highly valued tech giants, this is undoubtedly a huge and long-term bearish signal that must be guarded against. Furthermore, persistent global inflation and unpredictable geopolitical factors increase market tail risks. These potential black swan events could trigger severe stock market volatility at any time, making the investment environment more complex. The big players' liquidation acts are essentially a defensive risk exposure reduction operation, showing extreme caution. Their shift of funds from highly valued tech stocks to more certain assets is, in itself, a strong bearish signal. Facing the Silicon Valley Godfather's shocking portfolio adjustment, how should retail investors respond? First, firmly refuse to blindly chase highs. At highs where institutional investors are already exiting, retail investors must not become the last ones holding the bag, avoiding huge losses. Secondly, it is crucial to reevaluate your investment portfolio's risks, carefully examining every stock you hold. For stocks whose valuations have severely overdrawn future years' performance, serious consideration should be given to moderate position reduction or hedging. Third, pay close attention to insider movements within companies. Their buying and selling activities often hold more reference value. Transaction records of company executives and top venture capitalists usually predict true trends more accurately than Wall Street analyst reports. Finally, maintaining ample liquidity is crucial. Cash is king, especially at market turning points. At times when the market might be at a turning point, holding cash or equivalents, waiting for a better strike zone, is a wiser choice. In summary, this liquidation storm is not just a bearish view on Nvidia and Tesla but a severe warning against the entire tech stock overvaluation bubble. Market euphoria often leads people to lose rationality, forgetting potential huge risks and making erroneous judgments. However, the actions of top investors constantly remind us of an iron rule: risk control is always the paramount priority in investing. Remember, protecting principal and mitigating risks are the most crucial cornerstones for long-term stable profits. Never be careless. Still chasing Nvidia and Tesla highs? Big mistake. A Silicon Valley Godfather just liquidated, not a single share left. He saw dangers we missed. Nvidia's valuation is overstretched, competitors are attacking. Tesla's price war, profit margins hit new lows. High interest rates, growth stocks face double pressure. These two giants are facing a fatal crisis. Smart money has exited. Do not blindly chase highs. Review your portfolio. Consider reducing positions to lock in profits. Maintain cash. Patiently await bottom fishing. Follow the pros. Reallocate your assets. Thanks for watching. If you found this insightful, please like, subscribe, and hit the bell. Don't forget to share your thoughts in the comments. See you in the next video.